Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Motherson Sumi, a very good auto ancillary company. But is it a buy at this point of time or not? Let's understand. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about Motherson Sumi, but before I go to the company, I have a small request to make to all the viewers here on YouTube. Kindly support me on Patreon, and even $2 a month support from you will go a long way in making this journey for making all the investors more knowledgeable about the stock market even further. And I'll be able to post more videos and more interesting stuff on YouTube about all the companies. And once I have around 100 subscribers or 100 patrons on Patreon, I'm going to start with a free kit on YouTube on say technicals as well as on fundamental analysis of stocks. So I'll have a free educational series of 16 weeks on the same. Now about Motherson Sumi. It is a leading auto component manufacturer, and they boast of marquee clients from abroad. So they have businesses in Europe and US, and majorly in Europe, such as United Kingdom. They have big clients such as Volkswagen, etc., Ford, and so on and so forth. The clients include, as I said, Volkswagen, Mercedes, Ford, and they produce multiple car parts, four-wheeler vehicles parts, all across the board. They have a decent dividend payout ratio, and a very good return ratio has been their performance before the auto slump that has taken place over the last year and a half in India and in many parts of Asia. About the numbers of the company, then the market cap of the company is around 35,000 crores, which has reduced from around 55,000 crore at its peak. The sales has dropped by around 5.5% to 15,440 crores versus 16,300 crores, and the profit dropped around 40% for the December quarter to around 320 crores. Reduced auto sales has really hurt the numbers, and then this coronavirus case has also dampened the spirits of all the auto companies globally, and Motherson Sumi is not out of that bracket as well. Margins have shrunk over the last year or so, and currently it trades at around 25 times earnings, and when it was trading at its peak, the stock was trading at around 45 to 50 times earnings. So you can understand that even the valuation has also reduced compared to the numbers that have come through on the bottom and the top line. The performance of the stock is down around 27% this year or in the last 12 months, and has recovered from the September lows. So in September it was down to nearly 85-90 rupees. So you can understand from those levels it is up around 111 or 12. But with this coronavirus scare and the fact that the numbers are not coming in all the auto industry, and we can see a turmoil for the next 18 months in this industry, nobody is putting their hand up and buying auto, and we are seeing auto companies, auto ancillary companies being battered out of shape, left, right, and center, and not just in India but in US and Europe as well. The sharp dip in profits has not helped either, and this 40% decline has meant that the stock has come down. And if I look at a 3-year chart of the company, then the stock has come down from around 250 to 60 levels to around 111, 112. But one needs to understand that there is strong promoter holding and institutional holding in the stock, and only 14-15% of the total shares are free, or you can say the holding is with the retail investors. Other 80, more than 80% of the holding are with strong players like institutional investors, HNIs, large investors, mutual funds, fund houses, etc., and the promoters. The return ratios has remained strong, and even today the return ratios are in the early teens. So not that they are going down further or going into the negative territory. Many auto ancillary companies have gone into, you can say, not quite losses, but the profits have dipped something like 60-70%, and here the profit dip is less than 40%. So why has been the slowdown? The auto industry is under stress, and I've said that many times, that the auto sector itself is a cyclical sector over a 10-12 year cycle. So 3 years or so is always there is a downplay of the sector, or the sector goes through a downturn for around 3 years, and around 6-7 years there is boom in the sector. So this is right in the middle of those 3 years. The downfall started in later part of 2017, early 2018, and it has continued all through 2019 and now 2020. I believe by 21 or middle of 2021 things will be very interesting, and interestingly poised because of the movement of the stocks. The stock has fallen a lot, and the valuations of many stocks, auto ancillary and auto companies, four wheelers, two wheelers, have become very attractive now. So over the next 6 months, these are really good times to accumulate such stocks like Motherson Sumi, Aisha Motors, Maruti, etc., at these levels, or on 10-12% downside, because the auto industry is under stress at the moment, but things would improve for sure in the coming years. Another reason for the fall has been the spread of the virus that has taken place in China and has now spread to more than 40 countries globally, and due to which many businesses have shut down over the last 2 months, and things are really bad. In the East Asian regions as well as in Europe, we have seen many, you could say, cases coming in from Italy, and many cases coming in from Northern Europe, some cases coming in from UK, and these are big places for Motherson Sumi, where they have big businesses through auto companies. So that's why the stock has fallen after making a slight comeback, and the stock going to around 130, 135, but now it has fallen to 110 rupees. So European countries getting hit is a major factor. The economic slowdown and fear that it will escalate globally over a period of next 12 months is also putting pressures on uh, direct economy plays like autos. It is a direct, you can say, discretionary play globally, and whenever the economy gets hit, then the auto companies are the first to be sold off. And that's why this is what has been happening in India also, because of the current economic situation, current turmoil with the CAA and other things coming into play, the other externalities. Things are really not good at the ground, and probably that's why I believe that this is one of the worst times for such industry like the automobile, and probably the best time to start investing in it. The projection of further stress in the next couple of years is also making the stock prices go further down. So, as I said, that over the next 1 year, people do not expect auto companies to do well. People do not expect Indian economy to do well over the next 3-4 quarters, especially because of the unrest that is taking place in northern part of India. That is also not helping, and things are really, you could say, fragile at the moment on the economy front, with the growth being at less than 5%. So all these factors are also eating into stock prices, and that's why the prices of most of the auto companies are going down. The sector has gone completely out of favor, and people are looking to move into safer bets like IT, pharmaceutical, or FMCG, and pure FMCG, large cap FMCG companies. So these were the reasons why the stock has fallen so much, and we see that there are multiple levels of problems that are plaguing the industry at the moment. So, what is my call on this? Well, if you have the stock, then you should hold on to it. Probably buy closer to 100 rupees, between 90 and 100 rupees. Even if you have it at 140, 150 rupees, you need to average it down. This is a high pedigree auto ancillary company. It's not just a small or mid cap auto ancillary company that do well only when the days are really good. Motherson Sumi has shown its pedigree over the last 4 or 5 years with its moves and the way it has taken on the auto businesses across the globe. And I believe that it'll again come back into fashion over the next 5 6 years. It's a matter of just the next year or so, probably year to 15 months, that things would might not be good. So the next 4 quarters might not be good, but these are the 4 quarters in which you can go ahead and buy into the company and invest into it for further profits over the next 6 to 8 years. So cycle will turn around in the next 2 years or so for sure, maximum 3 years at the most, but I don't think it'll stretch to three years. So buy incrementally over the next 18 months and you'll reap the benefits of it. The spread of virus should also subside with time. It is expected that during summers the virus may subside. There have been news going around, but I cannot substantiate on it. But I believe that if one can invest over the next 18 months in this turmoil, they're going to make a lot of money over the next 6 to 7 years. There would not be any immediate reward, but you won't get such prices or valuations when things really get better, because stock prices discount the future and the market discount the future. So people would go ahead and buy into the stock very early on before the turnaround takes place. Don't trade into it. I don't think there is any merit in trading into companies which are not making new highs or which are not in strong technical, you can say, scenarios. And stay away from any auto or auto ancillary company to trade into, and only put 5% of your total portfolio, so that if anything goes wrong with the company, you'll still have 95% of your portfolio intact. So this was my video on Motherson Sumi. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.